What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we saw a bounce across the board as we start to break through some minor resistance levels, and there could be the possibility we're getting a bear market counter trend relief rally. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today in SPY we were up 1.87%, and we did close back over the 5 EMA, and we are sitting above 393. Which is going to be our critical level that we need to pay attention to. Remember, SPY above 393 means we could be getting a counter trend rally, and that counter trend rally is very likely to take us up to retest 408, 420, or 430. So there is a very real possibility with SPY above 393 that we could be going into a counter trend rally, so you need to watch this level very closely. Remember, I told you below 393 it is likely we're going to 376 or 370. But currently SPY is above 393, and if we start to see any follow through and we get a daily close above 400, we could go all the way back up to at least 420 and possibly even higher before we put in that next lower high and possibly continue into a bear market. Anything is possible, and you need to make sure you're following price action. Another thing to pay attention to while SPY is above 393 is so far we did not start the week out red. So there is a real possibility we are closer to a 2011 than we are a 2001 or a 2008. Anything can happen from here, so watch this very critical level at 393. And if we break below 393, you're looking for that retest of 385 and those price targets below. And if we break out above 400, you're looking for resistance at 408, 420, and 430. And remember, there will be a ton of bears sitting at those levels. So don't just think in a strong bear market and a strong downtrend, the bears are just going to roll over and die easily. The bulls have the hardest job in the world going against a strong downtrend and coming from lower lows, trying to break out and make higher highs and higher lows. So you need to give all benefit of the doubt to the bears as long as we're making lower lows and lower highs. So it's a downtrend until it's not, but we are above this very critical level at 393, so please do not ignore that price action. Jumping over to the NASDAQ 100 triple Qs, we were up 1.66%, and we did squeak a close just above the 5 EMA, and so far we are seeing a bounce in the triple Qs above this level at 285. Now the triple Qs don't get a bullish breakout until we get all the way back above 303 and then 306. So those will be your very critical resistance levels to pay attention to. It's very likely that the S&P 500 will need the tech sector to kick it into high gear to start breaking out. So if we start to see relative weakness in the tech sector, it's very likely SPY will not actually get the bullish breakout. So on the triple Qs, you need that breakout above 303 and then 306, and then we could come back up and retest resistance at 318 and then 330. And remember, the bears will be at those levels, so they will not just roll over and give up. The next bearish breakdown is below 285, and we still have price targets at 276.8 and 269.5. It's a downtrend until it's not, so respect the downtrend as long as we're below 306. On the Dow Jones, we were up 2.05% today, and the Dow Jones by far had the strongest relative strength, closing back over the 5 EMA and having a very bullish day. Remember, in the Dow Jones, we did hit the price target down there at 308, and we need to break below 308 to get to the next price target at 297. So there is a real possibility we are in the process of getting this counter trend rally as long as we are sitting above 310. We did get that bullish breakout in the Dow Jones above 316. So from here, we're likely coming back up to retest the 20 simple moving average at 325 and our resistance zone right around 326. And we do have very strong bears sitting up here at 333 and 340. Remember, the bulls have a very difficult job going against this trend. So every time you see a bullish looking candle, you need to give benefit of the doubt to the bulls for putting in the work and pushing against the trend. So you don't want to get overly bearish when you're seeing green candles closing near the high of the day. So look for the next very strong resistance right around 325 to 326 in the Dow Jones. And that next leg lower on a break below 308 will be down there at 297. On the Russell 2000 IWM ETF, we were up 1.21% today, and we continue to see relative strength in the small caps, closing back over the 5 EMA and reclaiming resistance at 178. You can see the 13 EMA and the 5 EMA are flattening out, but we still have a very negatively sloping 20 simple moving average, and price action is still below that level. The next bullish breakout in IWM will be above 183 and then back above the 190s. And we still do have a valid price target down there at 165.7. If we close that gap and continue to trend lower, the next price target is at 156. But as long as IWM is trading above 178, don't rule out the possibility that we're getting a counter trend rally that could take the small caps back up to retest the 190s. On the Arkk ETF, we were down 0.64% today, and Arkk continues to consolidate sideways just above $40 and just below $44. Eventually, we should break out of this trading range and go for another measured move higher or lower. So look for the break above 44 to go to a measured move higher, or a break down below 40 to go to the measured move lower. If we break down below 40, we're very likely retesting the lows right around 36 or the price target at 33.7. And if we break out above 44, we're very likely going to break out above 47 and come back up to retest resistance at 52. Arkk is still in a very strong bear market, so do not get bullish if we start to bounce, because it's more than likely going to be another lower high before another leg lower unless we get that breakout above 52. On the VIX, we were down 3.23%, and we continue to see the VIX getting crushed, forming lower highs, although we are still forming higher lows. And it can't be said that the VIX is breaking down or out until we break down below 24 for the bullish breakout, or break back above 30 and try to get up there to 38 for the bearish breakdown. Remember, the VIX spiking to 38 will likely be a very volatile sell-off that could be hand in hand with some type of capitulation event, or at least some sort of climactic selling that leads to a temporary bottom. Until the VIX closes back down below 24, you need to be cautious of elevated volatility, so continue to watch the VIX and look for signs that the VIX is getting crushed down to get more bullish. On Bitcoin, we're currently trading down just over 3% lower, and we're sitting right around 29,000, and we are still building that foundation of support right around 28,000, just as we expected. The question from here is this all just going to be one giant bear flag before the next leg lower? And the next leg lower would very likely take us down to 20,000, but we have very strong support here at 28,000 and 25,000. And we don't want to rule out the possibility we get a counter trend rally from here. Counter trend rally on Bitcoin would take us back up to 37,000 and retesting the resistance trend line at 40,000. And we would be getting a lot more bullish if we did break out above 40,000. On NVDA stock, we were up 1.22% today, and we're still closing below all the moving averages, and we still have the bear trend, and we're just a couple of days away from earnings. We still have a valid price target as long as we have the bear trend down here at 150, so don't rule out the possibility that we get to that price target before earnings. However, I do believe this stock is trying to put in a bottom, which means it's going to be getting a very impulsive rally in the near future. So if we do bounce off of any of this support right around 162 or the price target at 150, you will be looking for a very impulsive counter trend rally that could take us all the way back up to 210. We still have resistance at 179 and 199, and we're getting a lot more bullish if we break above 210. On Tesla, we were up 1.66% today, and we're getting very close to that downside price target at 620, and we are still in the bear trend, so we still do have valid downside price targets. If we failed to hold that support at 620, we could come down to about 600, but we are getting into some very oversold territory on a very popular stock, so we are not likely going to go much lower without some type of bounce from here. Look for a bounce to take us all the way back up to about 762 or 800, and we still have resistance right around 828 and 856. But overall, we need to remain bearish in the longer term as long as we're below $900. On Apple stock, we were up just over 4% today, and we are starting to get that oversold dead cat bounce in Apple stock, and it's just a dead cat bounce until we get some type of bullish price action. We closed right around that resistance, right around 143, and we are holding that support zone right around 137. If we break below 137, we have valid support at 134 and the price target at 130, and we're getting a lot more bullish if we start closing above 150 and above 156. We still have the bear trend, and we do have a bullish looking candle, but I warn you to not get overly bullish just on a dead cat bounce. We need to see follow through with tomorrow, break back above 143 and break out above 150. On the financial sector, we were up 3.25% today, and we did test the 20 simple moving average as resistance, which is still a negatively sloping moving average. And the price action is back over the 5 EMA and the 13 EMA. What I'm starting to see in the financial sector is seller exhaustion, as we are finding support right around 33. So look for a real possibility that we're starting a counter trend rally. Price action to pay attention to will be a breakout back over that 20 simple moving average, and then you're looking for a retest of the 50 EMA. The industrial sector was up 1.64% today, but we still have price action below all the moving averages, and we still do have a very strong bear trend. The healthcare sector was up 0.88% today, closing back over 3 of our 4 moving averages and getting the second close back over the 20 simple. This is bullish price action in the short term, but we still need to get back over that 50 EMA and start developing a bull trend. You're starting to see slow hints that some of these sectors are reversing the downtrends, so don't ignore the fact that the healthcare sector is reversing the bear trend. The energy sector was up 2.64% today, closing at a brand new 52-week closing high, and we still have bullish price action with a bull trend, so we could continue to go higher from here. So jumping back over to the S&P 500, please do not rule out the possibility that we are trying to see a counter trend rally while SPY is above 393, and that is a very critical pivot level. If SPY is above 393, you need to be looking for the possibility that we're trying to retest some of this upside resistance. And if SPY breaks below 393, then we're more than likely going for that next leg lower, which you do know the price target's below. Remember, in a volatile market, that volatility can work in both directions, and even though you're used to seeing the market go lower, you cannot completely rule out the possibility that the market is trying to bounce from here. We're getting a lot of evidence in some of the sectors that some of the bearish momentum is running low, which does increase the probability we're due for that counter trend rally sooner rather than later. Historically speaking, when you're selling off for this many consecutive weeks, you are due for a bounce by week 9, and we're currently in week 8, so you need to be starting to get less bearish as time goes on and follow price action accordingly. And right now, price action is telling us that we could be trying to rally. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank Trade Alerts beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.